All right, today we are jumping into a really fascinating investment report. It basically maps out a whole new battlefield in the global tech war, China's AI ecosystem. And this isn't just about stocks and PE ratios. It's a story of how a nation is building a technological fortress, literally brick by sovereign brick.
This one sentence right here from the report is the key. It's the key to understanding everything else we're going to talk about. The engine driving this market isn't just about making money, it's about national survival. China sees tech independence as something they have to achieve, and that creates a market that plays by a completely different set of rules for investors. And this is the event that kicked the whole thing off. The Great Bifurcation. You can almost think of it like the Berlin Wall, but for technology. U.S. sanctions, they didn't just slow China down, they actually forced it to build its own, separate, walled-off tech world. This split is the new reality, and it's what created what this report is calling the Red Silicon Fortress. So how exactly did they build this fortress? Well, not with actual bricks, but with policy. In this first part, we're going to look at the big strategic moves the government made to lay the foundation for this whole new ecosystem. Okay, so here's how China solved a massive problem. Their homegrown AI chips, well, they're just not as power efficient as the ones from the West. They burn a ton of electricity, which makes them super expensive to run. So what did the state do? They launched this huge project, East Data, West Computing. They build the data centers out in the western provinces where energy is cheap, and then the state pays for up to half the power bill. And just like that, using their own domestic chips suddenly makes economic sense. It's a massive government subsidy that really makes their whole AI dream possible.
And this is just a brilliant example of unintended consequences. You know the U.S. Entity List, the blacklist that was designed to really kneecap China's tech ambitions? Well, it had this totally paradoxical effect. By banning NVIDIA and other foreign companies from selling their best chips, it basically handed the entire massive Chinese market to the local players on a silver platter. They don't have to be the best in the world anymore, they just have to be the only game in town. It's a monopoly that was literally created by sanctions.
So, you've got a protected market, and you've got subsidized power. But who are the companies actually in the trenches, forging this sovereign hardware? Let's meet the architects of the fortress. First up, we've got Higon. The report calls them the safe harbor. Why? Well, thanks to a deal they struck with AMD before the bans really bit down, they hold this incredibly important x86 license. Now, what that means is their CPUs can run all the old-school legacy software that Chinese banks, government agencies, you name it, all rely on. So for the government, which has mandated replacing all foreign CPUs, Higon isn't just a choice, it is an absolute necessity. And that necessity, well, it shows up in this absolutely wild number, a price-to-earnings ratio of over 200. That means investors are willing to pay more than $200 for every $1 of profit the company makes. The report calls this a sovereignty premium. People aren't just betting on growth, they're betting on the dead certainty of guaranteed government contracts. It's a bet on policy, not just on performance. So, given its protected market and its guaranteed customers, it's really no surprise that the report's verdict on Higon is a strong buy. It's basically positioned as a core piece for anyone who wants to invest in this whole tech self-reliance theme. Now, if Higon is the safe, steady bet, Cambricon is the high-octane pure play on AI. Their chips are all about accelerating AI, which makes them the closest thing you can buy to an NVIDIA of China. This is your high-risk but potentially very high-reward champion. And just look at this explosion, a 1,300% increase in revenue year over year. That is not a typo. This isn't just growth, this is what you call an inflection point. It's the signal that these massive, state-backed AI projects have finally started buying and deploying Cambricon's hardware at scale. But even with that unbelievable growth, the report is pretty cautious. Why? Because the stock has already gone to the moon. It's what Wall Street calls a crowded trade. So many investors have already piled in that the stock price is assuming absolute perfection. So the recommendation here is to hold what you've got, but maybe don't go chasing it at these levels. Okay, now let's talk about what might be the single most critical company in this entire fortress, SMIC. They are the sovereign foundry. See, designers like Higon and Cambricon can come up with chip designs all day long, but SMIC is the only company in China that can actually mass produce them at a pretty advanced level.
This chart tells you the whole story. Their factory utilization is nearly 96%. In the manufacturing world, that's basically code for "we are completely sold out." And look at this, 86% of their revenue now comes from inside China. They have totally pivoted from being a global player to being a national champion, and they are running their factories at full tilt just to keep up with demand at home. So, according to the report, there's a really big disconnect here. The company's business is on fire, but the stock price has just been kinda meh. The report calls this an accumulation window, a chance to buy in while the market is still catching up to the reality on the ground. And that's why the final recommendation is to accumulate.
So we've got the chip designers and the company that builds the chips. But a fortress needs more than architects and builders, right? It needs power, it needs plumbing, and it needs a nervous system to connect everything. So let's look at the companies that provide all that essential infrastructure.
Here are the key support players. Zhangji Inalight, they make the super high-speed fiber optic modules. That's the nervous system that lets data fly between all the chips. Then you've got Neurotechnology. They're basically the arms dealer selling the essential manufacturing equipment to all the chip factories. And Envicool, they solve a huge problem. All that heat that comes off of these less efficient domestic chips, they provide the liquid cooling systems to keep everything from melting down.
And let me tell you, this is an incredibly profitable business to be in. Just look at Inalight's profit growth, 125%. The demand for faster data transmission is this global tidal wave, and they're one of the world's top suppliers, so they're benefiting from AI buildouts both inside and outside of China.
Okay, we've covered the hardware, the plumbing. Let's move up the stack to the command center, the big cloud giants. And this is where the report points out a really surprising and potentially massive opportunity for investors.
This slide just lays out the value gap perfectly. It's just a huge disconnect. On one hand, you have hardware stocks like Higon trading at over 200 times their earnings. But on the other hand, you have giants like Alibaba and Baidu. Their AI cloud businesses are growing at a blistering pace. We're talking 34% and 21%. Yet their stocks are trading at these incredibly low prices, like they're dying businesses. So how do you put all these pieces together? You've got expensive growth, cheap value. What do you do? Well, the final section of the report pulls it all together into a clear battle plan, and they call it the Billionaire's AI Playbook. The approach they recommend is this sovereign barbell strategy. It's a billionaire's playbook because it requires patient, long-term thinking. So on one end of the barbell, you load up 40% in those aggressive, high-growth hardware monopolies. On the other end, you put 30% in the deep-value tech giants like Alibaba and Baidu, betting that their prices will eventually snap back. And then you hold it all together in the middle with 30% in those defensive, steady infrastructure companies. And this table just brings it all home with the report's highest conviction ideas. A strong buy on Higon, that's the monopoly play. Accumulate SMIC, that's the sovereign put. Buy the dip on Inalight, the global leader. And a value buy on Baidu, that's the contrarian bet against all the pessimism in the market. So the red Silicon Fortress has been built, and as the report says, it's open for business. But this whole situation leaves us with a really profound question, not just for investing, but for the future of tech. In this new, fractured world, what's going to be the more powerful force in the long run? The top-down, relentless push for state-driven resilience, or the messy, bottom-up chaos of free market innovation? That really is the multi-trillion-dollar question. Thanks for tuning in.